I kind of feel like JP Morgan in particular's numbers were like a punch in the gut. I mean, we knew they might not be great, but kind of woke everybody up. What are you expecting today and going forward with some of the big banks?
Oh, good morning, Brian. I would characterize it a bit different. The miss was about 4% on consensus, so not a terrible miss, and virtually all of it was investment banking, which we knew was going to be weak. On the positive side, we saw an upward guide on net interest income, 56 to 58 billion, and that I think bodes very well for the upcoming regional bank earnings in particular. That more aggressive Fed is going to really help net interest income for these regional banks in particular. So I think that's a good cross read going forward.
How much of a difference then? You know, we like to use the term, Stephen, banks on CNBC. We have the banks. Banks are very different things, like saying animals. There's giraffes and there's sharks. They're both animals, right? But they're very different things. Regional banks are not trading currencies, commodities, crypto, whatever. How much different are the big Wall Street players, the JPMs, Goldmans of the world, from the super regionals that you just kind of mentioned?
Yeah, quite a bit different, actually. I mean, you have, in the case of JP Morgan, you have to realize that net interest income is only about 45% of total revenues. Everything else is capital markets and other non-interest income type items. So that's a much lower proportion than it is for regional banks, even a city up at 55, 57%. So regional banks even higher at 3/4 in some cases. So you have to look at the underlying income and revenue distribution streams and know that the big tailwind of higher interest rates is going to be a benefit.
Help us make some money, Stephen. Who's looking good right now?
Well, clearly the regionals I would favor a bit more over the investment banks. It's hard to see an easy case for a revival in either the third quarter or really this year in investment banking. You need a lot of things to come into the fray. More confidence in the economy, get that inflation issue out of the way, CEO confidence. So I would side towards those banks that do have that big tailwind, and Wells Fargo is one of them, pretty interest sensitive type of bank. PNC, U.S. Bancorp, Truist Financial, so these are all buy rated at Argus, and names that we expect to kind of ride through this, benefit from that tailwind of interest rates. And we haven't talked about credit quality, but that's obviously a big swing factor. If you look at JP Morgan Chase, they had 1.1 billion of loss provisions. That was right in line with the consensus. So not a lot of concerns right now. They talked a lot about the consumer, about the condition of the consumer. They're not seeing a lot of strain as yet, other than at the very low income levels. So I think they're in, we're in a good spot here, and it's going to be hard for the Fed to do that soft landing, of course.
Yeah.
And there could be more stress on the consumer, but we think provisions are going to stay reasonable.